In today's strategy lesson, we're going to be looking at trading foreign exchange long term. What we're looking at on the screen right now is a 5-year chart of the euro versus the US dollar. And as you can see, during some of the early years, certainly through 2009 through 2011, we had some big moves which offered great opportunities, both in the intermediate, short term, and long term. However, as you can see, during the last couple of years, the markets have gotten much quieter, and it has been somewhat challenging to make money. But I'm going to show you how to do that and trade successfully long term with our monthly trade triangle strategy. First of all, let's put our monthly trade triangles on the screen. So we simply go to our trade triangle box. You see an M there. We click on the M triangle, and you can see a number of triangles come into the chart. They red is bearish, green is bullish. What you do with this strategy, you use the monthly for trend and the monthly for timing. So unlike the other two strategies we've shared with you, this is a little bit different. So you totally reverse yourself. And I'll give you an example. Starting back here on May 20th, we went long at 137.38. The market moved up. We exited on January 19th, 2010 at 142.16. Not only did we exit the position, but we also reversed our position from long to short. So here, from here to here, we're long, and we make a profit of 478 pips, and we are now short this market. Market goes down, comes back up. We get out at 133.33 on September 22nd. This produced a profit of 883 pips. Now we've had two big trades already, so now we're long from 133.33. The market goes up and immediately comes back down, and we get stopped out, and we reverse at 129.70 on the 6th of January. We cover that position a couple of months later at 138.61. Now this produces a loss of 891 pips, which is very large and very unusual. There's a very unusual occurrence right here. So we're now long from 138.61. The market trends up. We get a signal at 139.69, produced a profit of 108 pips. Now so far, 1, 2, 3, 4, 5 trades, and every trade, with the exception of one, has been a profitable trade. Now we're now short from July 11th from 139.69, and we cover that position here at 127.47. That produced a profit of 1,222 pips, which far exceeded the loss and certainly put us very much in the plus column. We're now long from September 7th, and this is of course 2012. The market moves up. We get out at 28.77. And this produces another gain of 130 pips. We then reverse. Trade triangle says reverse. We're short. The market goes back up at 132.32. We take a loss of 355 pips on that position, and the market proceeds to move higher from this position that was taken on June 6th of last year. Now we have an open gain as of the 21st of February of 506 pips. So that's how you trade long-term in Forex, using a monthly strategy. It's not for everybody, but certainly some traders will like this approach. Now I'm also going to share with you the results. Each trade, you'll see every trade we made, and I just showed you. So let's go and take a look at those results right now. Before we go into the actual results page for trading the euro against the dollar longer term, I just wanted to point out, we mentioned this in the beginning of the video, how the ranges have been contracting for the last several years. For example, if you look at 2008, we had a 3,600 pip range. That's from the high to the low. Fast forward that to 2012, it's contracted down to 1,400 pips. In 2013, down to 900 pips. Normally when you see this contraction, it means something big is going to happen somewhere along the line here. So this may be an excellent time to be looking at this type of strategy using our monthly or some of the short-term trading or even the intermediate term strategies. But the key thing is each strategy has made money. If we get some really big markets like in 2007 through 2011, you're going to do extraordinarily well with these strategies. Now let's take a look at the actual numbers of this strategy using our monthly long-term program. Okay, as promised, here are the actual results of using our long-term trade triangle strategy for trading the FX markets. First trade was done on the May 20th of 2009, so it's been trading for about 5 years. And as you can see, the first trade produced a profit of 478 pips, and the second trade produced a profit of 883 pips. The key thing here is to reverse. You get long, and then you just reverse your position and then go short. Over the course of time, you can see we had total gains of 3,327 pips, losses of about half that of 1,609, and a net gain of 1,718 pips. So that's approximately about 350 pips a year on average, which I think would be fair to say. But remember, we did have that big loss, that 891 pip loss, which is, I think, very, very unusual. Losses could be in the 350 area, but that's extraordinary. But it can happen. But we also had an extraordinary gain of 1,222 pips. So again, it sort of offsets it. But this is a very good strategy. You could use this for trading ETFs, for example, but always use the spot prices on Market Club as they are real time, and they will help you with your timing. Monthly. That's the way to go if you're a long-term trader. Hey, this is Adam Hewison. This is the last in the series for Forex traders. I hope you enjoyed this strategy, and I hope you benefit from it in the future. Every success using Market Club.